Another business alert on General Electric. GE shares are bouncing back today after that 9-year low. Yesterday it was below $8 at the close yesterday, which was quite a sight to see, largely on the exclusive reporting of Charlie Gasparino, who joins us now from the newsroom. You have more today on GE?
Well, GE is up today, basically the best day in 3 years, Connell, and it's doing that because, as we reported, it is now continuing to shed assets. The latest asset it's selling is its Baker Hughes subsidiary. It is out of that. It announced that today. Not that long after our story said they were basically doing a fire yard sale of assets to pare down this company amid really investor concern, not just whether it's worth $8 a share or whether it's more along the lines, is it a viable entity? If you see the trading in its credit default swaps, that's insurance contracts on its debt, that's gone up. That means people are betting increasingly that it could default on its debt. Not meaning it will, but the bet is it could. And when that happens, prices of credit default swaps go up, and they've gone up dramatically on GE right now. And so it is a company in crisis. Current management under new CEO Larry Culp knows it. And as we reported, they have at least two major investment banks, Goldman Sachs and JP Morgan, looking at selling additional assets. And here's where we don't know, Connell, whether this is a company that will just pare down to a couple of small companies, or whether we will not see GE exist as a coherent entity, whether they sell off the major units into separate companies as they sell off other businesses. That is on the table, I am told.
Wow.
Doesn't mean it will happen.
They're valuable parts here, though. They're valuable parts for GE.
I mean, but here's the thing, Connell, and I'll say this, because I've covered GE for many years. I know Jack Welch. I knew Jeffrey Immelt, the former CEOs. I did not get to know John Flannery. He was only in there for a year before he was replaced about 6 weeks ago by Larry Culp. In the past, GE was known as a conglomerate where the whole was worth more than the sum of its parts. The talk inside GE now is that's not the case. It's the sum of the parts that are worth more. And can you keep a company when the sum of, together coherently, when the sum of the parts are worth more, and analysts question your valuations? We should also point out massive amounts of debt on this company, $30 billion or so unfunded pension liability, $115 billion in long-term debt. That's a lot of debt, and they're on the verge of being a junk bond right now.
And they're just getting started with this. With
restructuring, yes.
With this process and how it plays out is still an open question.
Absolutely.
GE goes away as an option. That's really quite remarkable when you stop and think about it.
Yes.
I'm sure the goal is, I'm not sure, but maybe the goal is just have a smaller, more efficient
It might.
company.
I'll tell you, I can't get a good read on that. I mean, when I talk to investment bankers, they're saying everything's on the table. Apparently, and it was not apparently, but we have a full write-up on this on foxbusiness.com.
Okay.
There are various scenarios that the investment banks are developing with GE, and Culp has to make the call. One scenario clearly is, do you just blow it up? Another scenario is, do you get it down to some coherent, smaller mass and keep that as GE? And I don't know where it's going. We should point out the stock is up the best in 3 years, but it's still trading below $9 a share.
Well, that just shows you where it's been, where it's $7.99 at the close yesterday, $8.80 right now. Thanks, Charlie. Great reporting.